You're listening to the weekend edition of the Cortland Economics Report. I'm Al Cortland. Appreciate you joining me. I have one of my favorite people in the business with me right now, Dr. Michael Berry. Dr. Berry is, I think, the cream of the crop when it comes to people who are very, very savvy in terms of macroeconomic issues, in terms of finance, etc. Mike is a frequent speaker in Washington, D.C. at the Federal Reserve Bank. Mike has a newsletter that comes out every day that I believe he shares with his son now called Discovery Investing. I got to tell you, this is a guy who you really need to pay attention to, and if you want information on Discovery Investing, we do have Dr. Berry's banner on our homepage. Mike, thank you so much.
Great to be here, Al.
Let's have an overview of Discovery Investing. We haven't done that for a while.
Okay. Basically, great wealth is created at the beginning of the discovery cycle, and great risk is also inherent at the beginning of the discovery cycle. So we decided that this was an area that most investors didn't want to deal with. Most professional investors certainly don't want to deal with, the risk that's inherent and so on. So about 10 years ago, I started putting together what I thought were the 10 most important factors that would allow you to detail a discovery investment, whether it would be discovery of resources or a biotech discovery, a new cancer treatment, or intellectual property related to some high technology thing. And I found there were 10 basic factors that encompassed most of the risk and most of the reward. They were forward-looking factors, and so I used them for about 4 years and was very successful. And then I came across a gentleman named Dr. Terry Rickard, who was a brilliant mathematician, and he kept after me. He kept saying, "Mike, we got to put this on the computer." And I kept saying, "Terry, at this late stage of my life, and
late stage of my life. Pardon me just 1 second. Big Al turned 68 last month, Junior.
I'm getting there.
Yeah,
I'm getting there.
Not even close.
But so we after the Phoenix conference last year, we drove over here and we met here in Palm Springs, and we detailed out all of the possible permutations and combinations of factors, and we programmed that. We started programming in June. We funded it out of our own pockets. We have some of the best programmers in the country, and so now we have a system that covers all U.S. and all Canadian companies, and it covers it from a discovery perspective.
Elaborate the 10 factors really quickly for us, would you?
Sure. Management, number one, sure. Most important. World-class asset potential, number two, very important. Creative discovery that may change industries, number three. Sustainability of the company, number four. The view of the company by the markets, number five. Number six, catalysts. What are the catalysts that are going to create wealth here? Number seven would be the behavioral aspects of the company. Number eight would be the contrarian nature. Is it really? And right now, all of these stocks are in the tank, so a lot of them are contrarian in nature. You have to be brave to step in, but now is the time to step in.
The general consensus right now, however, is from people we've talked to at the show right now, and I feel very strongly about this also, I think 2012 is going to be, in terms of the resource sector, I think it's going to be a really, really great year. And one thing I need to say in the interest of full disclosure is Mike and I are invested in a lot of the same companies. A lot of the companies that I'm interested in, for example, are companies that I have learned through Mike and his son Chris newsletter. And my personal criteria for looking at companies, I'm not a PhD economist, but I do have a certain amount of common sense, and I have to tell you, I think Mike is right on. Now, Mike, let's talk a little bit about one sector that I'm very, very interested in right now, and that's agriculture. And the reason I'm interested in agriculture is I want to get back to one of my sponsor companies, full disclosure. It's a company called Passport Potash, and the reason that I'm intrigued with that particular company is because there really isn't any serious potash asset, or maybe I should say there really aren't any serious potash deposits in production in the United States right now. And potash is a very, very critical element of the agricultural industry.
We like Passport Potash a lot. We've visited their site in northern Arizona.
I was there with you
Yep, that's right. I guess it was a year or so.
about a year ago. Yeah.
Yeah, and when the area of food and water, I was listening to one of the presentations this morning. I think the presentation from Frank Holmes' group, and he basically said, food and water, and we tend not to focus. I think having this focus in the ag sector, wherever you can get it. Potash is one, and there are other ones as well. I think it's very important.
I would agree 1,000%. Now, in terms of getting back to the now potash would be part of the resource sector, but let's talk a little bit about the precious metals sector. How do you what's your outlook, Mike, on precious metals for 2012?
I don't like to do short term. 2012 is too short term. I think that generally that gold is going to be much higher. I'm going to be presenting at the Fed next month and then again in July. The Fed is going to ease, and we're going to see both the multiplier, the money multiplier, and the velocity turn up. And when they do, we're going to have inflation. Now, we don't have inflation. Well, at least the government tells us we don't have inflation right now. Once this money gets unleashed, it's kind of bottled up right now in the marketplace, you're going to see gold and silver and platinum and the precious metals go much, much higher, and I mean much, much higher. So certainly by in 2012, I think we could have $2,000 or $3,000 gold.
I would have to agree with that 1,000%. Okay, one thing I want to stress, you guys, in closing here is that, again, take a look at Mike's website. It truly, truly is a website of consequence. You need to take a look at it. Michael, appreciate your time.
Thank you, Al.
We're going to be right back.